Hello, hello, and a massive hello, everybody. This is 50 Pips, rocking and rolling, 27th of June, 2016. No trade calls or recommendations are responsible for their own stuff. We're here for educational purpose only. And the fact you're listening to this means you understand all the disclaimers on the blog, understanding that we're performing some live technical analysis in a learning context for educational purposes only. So what's going on? So we've had some decent moves here, and really, despite some interesting data points throughout the week, it's really all about, how the market's going to follow through after last week, right? Some of the interesting things is that even though we had some extremely aggressive moves, a lot of the ranges we expected to hold, held, and so all things being equal, very tradable conditions as we come into this week, right? First things first, what's going on gold? So gold, we were talking about the fact that we were stuck in this 1300, 1250, 1200. We had the 1150 on a downside break and the 1350 on an upside break, right? So these were the levels we could look at in terms of extensions breakout where we would be interested to fade. So here we see that basically we had that ramp up on gold, nice little hold, and bam, through to the 50. That's exactly where we got the rejection. So going into the week, the way we look at this is a range shift. So we've got new range for us going into the week, 1250, 1300, 1350. So bull bear line to the upside, hold below. We'd expect the market to try and come back into the 1300, which now becomes the new pivotal level, the new bull bear line, right? And that's the key for Momo and flows. You've got these two moving averages will be coming up, following, trying to look at this as the base. Now we'll have to see how the market settles, how we behave. So fairly decent levels, fairly clear levels, nice action. What's going on the ES? ES, as pure as can be, range is still 2100, 2050, 2000. We talked about the failures at high range. The only thing we could expect was for a move back into the 1250 and 1250 being pivotal inside range. As soon as we broke below, bam, very aggressive sell-off. Again, don't think anybody was expecting the velocity of move, but still velocity of move inside range. Why? Because we're still completely inside the range we've been talking about in these videos for quite a long time. So what to look for going into the week? Going into the week here, as long as we hold these lows, we would expect a little bit of a relief and a bounce, possibly into all the way back up into the 2050. Would expect a lot of market participants to try and sell there, confluence of a multitude of levels, descending trend line, etc., to try and press this back towards the 1950s or lower. If we gap down this morning into New York and it can't catch a bid, would not be surprised to see the 1950 come extremely quick, okay? In terms of bigger downside targets on very accelerated action, what we would look at is, this whole 50 back of the move from those lows to highs, and that's coming in inside the 1960 to 1920s range. But again, we also like to keep it simple and just look at those increments and those support and resistance that we have up on the chart. For now, this hasn't changed. It would require us to start to see daily closes below that 2000 to see something similar to what happened of gold, and what we would call, or the way we look at this, or we try and structure this to try and make it easier, systematic approach of looking at this would be a range shift for a move back down, and the new range would be 2000, 2050, 2000, 1950. But for now, that still has not occurred, okay? What else do we got? Just trying to keep these quick. I don't want to keep these too, make these too longs. Okay, cable, what's going on cable? So cable, let me just clear this chart up a little bit. Going into the release, what we talked about in terms of Brexit upside, we had these 48.20s, 45.60s, and downside we had the 35.05 into the 32.50, right? So we see that this downside is holding quite nicely. Now here, if you look at this bigger move, highs to low, sloppy retracement into the 50 back, right? We're through the zero. So a hold below the zero, a heavy action below those lows, we would expect this to try and continue all the way into the 123 extension. This is a much bigger move. That's calling for 116.90s, right? So call it 117. That's a very, very aggressive move, okay? In terms of the smaller move, which I had up because a lot of people asked about that and wrote in, right? As far as we're concerned, this move here is finished, right? Move down. We were traced back into the 50. We completed into the 123. That's where we got the little bounce, and we sold off into the 150. Now, of course, you could have 161 targets, but as far as we're concerned, that move is finished. So going into the week, the only thing that really matters is, are we going to hold heavy below here? Or are we going to a little bit of a relief bounce? But unless something silly happens on a relief bounce, we would expect that bounce, 50 back of that bounce, etc., to find sellers. Now, keep in mind, the big question is, are we going to get some kind of coordinated central bank action? You know, are the BOJ going to kick this off? Is the SMB going to kick? We'll have to see. So that's the big risk going into this week. So I would be very cautious about chasing moves, right? About selling lows, buying highs. I'd be very tactical, okay? Crude completely still in line. Go back into the other outlooks if you're interested, but as long as we're stuck here inside 47 to 51, difficult to call. We need daily closes, weekly closes outside that range to see where the next move is going. And in terms of euro, which was another one a lot of people wrote, actually, by the way, remember what we said on silver. Our outlook is still for rotation higher. But you had to respect this level. And that's, you know, don't go buying into ahead of the break of the 18s. You see you got a nice little dip here off that low, giving you a chance to try and buy this if you wanted to. Not a trade we would take. We'd prefer to ride original entries, but you have to respect those support and resistance. Never let any market condition or any trade that's going in your favor make you change your plan or get too excited. And if you're not in trade you want it to be in, never get too excited that you end up chasing. It's both these scenarios are usually recipes for unhappy end of the day action. Okay, euro, what's going on euro? Basically euro, we sold off very, very aggressively. We blew through all the levels and we came right back into the downside bottom end of the channel, which was that 1050. Remember, our extremes was 1050, and then we had this 117 back to the upside. And here, as long as this holds heavy, you'd expect to see to continue to try and take a stab lower, right? Now, we had a lot of gap fills overnight, as usual with those gap fills. Don't be too greedy. You know, if they're pretty much close to be filled, you know, you don't want to be last one to the party. And as we say, you know, the last pips can be the most expensive. And never forget, you know, playing aggressively, any kind of plays, whether gap fill or scalping on markets that are moving with a lot of possible slippage, spreads widening, is usually not worth it. It looks great on the chart. With hindsight, a lot of people can pretend they were geniuses, but actually trading conditions may or may not be favorable, right? Charts, looking at something that happened on a chart, is very, very misleading a lot of the time, okay? But here, as long as we don't get back above this area, which was sold off aggressively, that was supported aggressively, as long as the market can't start to close above here and make a good stab at these 112s, this will likely continue to trade with a fairly heavy tone. But again, I would be very, very careful in trying to chase these moves, especially with possibility of a lot of central banks, government news on the wires and reaction. I think it makes sense to let this thing settle, be very tactical, and take advantage of this great volatility, which is great for trading, but don't trade at illiquid times. Don't flip coins. Let the market come to you. Be patient, work on your setups, and engage at the ideal locations where you feel you have the best edge based on your strategy. Really important. Do not get caught up in all the fortune seekers, Instagram posters, people on Twitter calling out they made a gazillion pips, they made a killing. Remember, anybody who really, 9 times out of 10, anybody who's actively talking about how many pips they made or how much money they made, it's either not true or it's not true and they're trying to sell you something, or they desperately need some attention. People that are doing this seriously tend to focus on their account. People who are around and want to help other people talk about direction, talk about technicals, try and point people in the right direction. They're not there trying to talk about, I made money, I didn't make money, I levered up, I had the best day, I had the worst day. That doesn't matter, right? So again, be focused on your account, be focused on your results, be focused on staying solvent, be focused on putting yourself in the best possible condition to succeed, be focused on enjoying these market conditions and internalizing this action to make sure that next time something like this happens, if it ever does happen, you're even more prepared than you were this time. Thank you so much for listening, and have an awesome one. See you guys on Twitter. Take care. Bye-bye.